Hey there, team. It's your friendly neighborhood loan officer, Bryce Elder here, Sunrise Mortgage Group. Just wanted to check in with you and give you a little bit of a flyover of a tool that I use a lot called Mortgage Coach. It is probably the best mortgage calculator that I've ever found in the 18 years I've been doing this business, and it really helps to solve the problems of trade-offs and trying to figure out which program is the best for me. So I figured I'd take you through a little flyover here to do a little case study with you. We will now check out the case of Irma Hermbayer, who is not sure which mortgage loan program is going to be the best fit for her. And we're just going to pretend like we're having a little chit chat here and show you what the process looks and feels like for somebody who's in that situation. So, welcome to Mortgage Coach. When you open it, it's going to look like this. Your best experience is going to be in a Chrome browser because that way the numbers are going to look big enough that you can actually see them. There is a mobile version of this, and you can check it out on your phone. I do love having that available for my clients who are out and shopping for homes, and we can update these numbers very quickly for them when they're looking to make offers and things like that. But front of it, you're going to see my glamour shot here. This is required for the industry. So first thing you're going to do is get rid of that. So we're going to move this around and move it to try to fit your screen. First thing you're always going to look at is the summary quote date here. Interest rates and terms sometimes move independently of what we wish for, and we want to make sure that we're on the same page at the same time with all of those things. So if you're looking at this number and it's a couple weeks ago, we might want to check in and update some of these numbers. Anyway, Irma is looking at a low down payment situation, and she's not sure whether or not an FHA loan, a conventional loan, a USDA loan, or a VA loan are going to be the things that she's looking for. We're assuming that she's looking in the 500K purchase price range and that she doesn't have a whole lot of money to put down. So we want to look at some of the trade-offs on some of these loans. For now, I'm just going to assume that the interest rates are all the same. That might not be the case all the time. There may be situations where we can manipulate those interest rates by paying points, or the different program type might require a higher or lower interest rate. And of course, that's going to be something that we're looking at. But from top to bottom, we've got your purchase price, your loan amount, your interest rate, which is the note rate at which you would repay. Right underneath that is your APR. Your APR is simply an expression of the interest rate plus the total cost of the loan re-expressed as an interest rate. We talk more about that, but I highlight the one that you actually pay. Underneath that is your term, 360 equal payments is a 30-year fixed in this case. Right underneath that is your total monthly payment. Notice that's double starred. If you go down here, you'll see that your property taxes, homeowners insurance, and mortgage insurance, if there is any, are included in that. So that's the total payment. If you can afford that, if you feel comfortable with that number, you should feel comfortable with this purchase price. If you want to see more information on that, I would direct you to the More Info tab, which is going to be your best friend in the world. Use it early and often, and when you do, it's going to bring you into 3 subtabs, 2 of which we're going to use briefly. The third we would really get into in the 300 and 400 level class, where we're talking about what to do about your total net worth over time, in cooperation with maybe an asset manager or a financial planner. But for now, you can see in the payment breakdown tab, you have your principal and interest, your property taxes, your homeowner's insurance or hazard insurance, and then your mortgage insurance. Now you can already see right here, there's some really big differences in what somebody might pay for mortgage insurance, which doesn't cover you, doesn't cover the house. It covers the lender in the event that you were to foreclose on the property. It measures risk. Anybody who has less than 20% down has to pay this in some way, shape, or form. But you can see that that varies over all of these different loan types. And so that's something to consider when we're thinking about how we qualify. But it totals it down here. If you've got homeowners association dues, or if it's in a flood zone or something, you've got to pay extra, flood insurance. We can calculate that. If you want to actually try and see what it looks like if you were to pay a little bit extra towards your principal every month, we can calculate that, and it's going to show you how that benefits you over time and save you interest over that time. I'm going to pop back out to the front because we can see that, yeah, hey, there's a tax benefit to home ownership. I want to take this with a big grain of salt, especially on this little video, just because this one definitely requires a lot more attention and probably the involvement of a CPA or a review of your tax returns to let you know whether or not this actually is going to move the needle for you. Most people are looking at hitting the standard deduction, so it may not actually be as big impact as some people might make it out to. There's a lot of lenders out there who love to say, oh yeah, buy a house. Don't worry, it's not going to be as expensive as you think it is because you're going to have this amazing tax benefit. Might not necessarily be the case for everyone. So let's take that with a grain of salt for now, but it's cool that we can calculate it. Underneath that, we have your total cash to close. This is inclusive of your down payment, closing costs, escrows, prepaids, reserves, the whole kit and caboodle. So if you can afford this number, then you should be comfortable with everything else. If we want more detail on that, guess where we're going? Back to the more info tab. Under closing costs, we can see very clearly, okay, here's just the down payment for each of these. Wow, we got some that are 0. Underneath that, you have your loan to value, which means that the lender's coming up with a certain amount versus you coming in with your amount. We've got a couple other sections in here that I don't super love how Mortgage Coach puts these together. APR costs, non-APR costs. What does even this mean? Prepaids, what are those? I like to, when we meet, go line by line and show you who gets paid what and why, because when we put it into these categories, people are like, what the heck is an APR cost? I don't know what that means. I want to know who's getting paid what and why. For that, I'm going to direct you all the way down to the little fee detail button. We're going to click on that, and lo and behold, it's going to show you, hey, here's all our fees line by line. And each one of these has a little story that goes with it. And when you understand that story, it helps you to know what sort of agency you might have over controlling whether that exists or not, whether it's negotiable, whether it's something that we can have a seller pay for, all sorts of different ways that we can break this down. And it's really fun for me to do. I geek out, obviously, about this stuff every day. So we get real clear on what the total of those numbers is. In this case, total borrower paid closing costs almost $13,000. We want to add a little bit of wiggle room in there for a day's worth of interest, depending on what day of the month you close. But other than that, we can take this number, put it on top of this number, and that's how we arrive at this number. So we're all about making that really clear. And then when we want to take a look at what the trade-offs are, we're doing that on 3 different timelines. We're doing that in the short term, the medium term, and the long term. So we're going to see those on the right-hand side. We've got monthly payment difference. So you can see, okay, short term, what is my month to month budgetary difference based on one or the other? You can see that very clearly. It shows you the savings versus the most expensive one. Then we're going to take a look, and I'm going to ask you questions like, hey, how long do you plan to be in this property? Do we think maybe there's a possibility that we might be refinancing in the near future? If so, we can move the slider on this savings over X amount of time situation here. Right now, I've got it set to 60 months because most people will either sell or refinance their home within the next 5 years. So within that time, we want to know how much did this decision that we're about to make save us, right? And it tells us exactly. It would have been cheaper if we did the home ready loan by about $15,000 over that amount of time. If we have questions about exactly how the math works on that, we can go to the View Details button here, and we can see how it actually does the math. Over the next 5 years, here's how much you would have spent in principal and interest payments. Here's how much principal you would have paid down. That's going to be different on each of these. Here's how much balance remaining is. How much equity did you build over that time? How much interest and mortgage insurance did you pay, or did you pay it at all? Was there a tax benefit? Was that realized? We can take that in or out. And what was the difference in your closing costs? Did you pay extra points to achieve a lower interest rate? It gives us the net savings and shows us that difference so that we can make educated decisions about what that should look like for us and our budget over that amount of time. And then, of course, over the long term, too, we're going to look at it over 30 years. Now, nobody ever makes it to the end of 30 years, so you got to kind of take this with a grain of salt. But it's pretty cool to be able to see that difference and see just how stark that is in some cases. It can be tens of thousands of dollars. So those are things you might want to know before committing to any one of these loans. Down underneath here, we show you again the monthly savings. Total interest percentage is Einstein's eighth wonder of the world, compounding interest. It just shows you that, yeah, over 30 years, you're going to pay about $716,000 in just interest in MI. That number is 127.8% of this number. Holy crap. But yeah, that's what allows you to afford a nice low monthly payment. Sometimes I work with investors who want to know what's my all-in over the next 5 years. Not super helpful for most people, but we can play with that too. Again, we show the savings over 60 months here, which is shown graphically to the right. And then another cool thing is to look at the payment stream. This is really interesting because you can see that for different loan types, your mortgage insurance is going to be hanging out for, in this case, the life of the loan all the way down. Let's take a look at what that looks like on the conventional loan, though. Oh, cool. It actually is going to go away. So after the 144th payment, if you don't refinance before then, that is going to drop by, about $200. So it doesn't last forever, and it's not going to be something that affects you forever. Nice to be able to know when that could go away and how that number is affected by putting a bigger down payment down on a conventional loan. Lots of fun stuff that we can do in here, and a lot of different ways that we can change the numbers to see what the trade-offs are. So I just thought that this would be a kind of a good window into what I do on a day-to-day and how how I help my clients to make good decisions about the options that they may have. So I hope you enjoyed this. Check out Mortgage Coach. If you want me to make one of these for you, I would love to. It's super easy for me. It takes 5 minutes. So give me a call. Let's chat about it. Let's see what it looks like for you.